The Chinese leader took one look at crypto and he says, not in my China. And boom, oh, well, there isn't any crypto in China. He's right and we're wrong. Well, and there is no good argument on the other side. I can't supply it.
So does that counter what you said back at USC? That you shouldn't have a position unless you can counter?
No, it isn't counter. I do think you ought to be able to state on a lot of issues. You ought to be, how big should the social safety net be? That's a place where reasonable minds can disagree. And you should be able to state the case on the other side about as well as the case you believe in. But when you're dealing with something as awful as crypto, it's just unspeakable. It's an absolute horror. And I'm ashamed of my country that so many people believe in this kind of crap and that the government allows it to exist. It is totally, absolutely crazy, stupid gambling with enormous house odds for the people on the other side. And they cheat in addition to cheating in the betting. And it's just crazy. So that is something that there's only one correct answer for intelligent people there is just totally avoid it. And avoid all the people that are promoting it.
How do you feel about the gambling that took place at the Super Bowl and surrounding that and the legalized gambling taking place in this country at this point?
Well, it's not as bad as crypto. I don't think there's much harm in betting a modest amount you can afford on a Super Bowl game. That strikes me as pretty, particularly if you do it with a friend and not with a bookie. So I don't have the same feeling. I obviously don't think you should have a gambling compulsion to run around betting against odds. If you take all the money that I have bet against odds in my whole life, I don't think it's more than a few $1,000s.
That was Charlie Munger on Bitcoin. And I've long I've long been skeptical, I should say, of Bitcoin. I just never can understand it. What is the underlying asset? And if you're looking for an inflation hedge, why not buy assets, real assets? Why paper or some digitized entry into a database? But so many people believe in are true believing in Bitcoin, and some people clearly have been able to make money trading Bitcoin. But is it an investment? Is it a scam? I just clearly want to know. And if there's anyone in the panel, I'm going to drop the link and would like to come up here and have a better understanding or have a different opinion about Bitcoin, or even a better explanation about Bitcoin. Feel free to come up. I would love to hear your opinions. But Charlie Munger, I'm not sure if someone says boomer, give credit to me, says boomer. But, he has been an investor for a very long time. And so I would want to listen to what he's saying at the least. Get credit for me. I think Get Crack is a Bitcoin guy. So this might get interesting here. I like your avatar here, Get Crack. How's it going this morning? Crack, you there? You just want to listen for now. So in getting ready for this show, again, I come to Bitcoin with a skeptical point of view. So I wanted to do some research from the negative side, just to hear the people who aren't cheerleading Bitcoin and the ones who are expressing some skepticism. And I couldn't find anyone better than Charlie Munger. He's been outspoken about this. Get Crack, you there? Get Crack, you there?
Yeah, I'm here.
What are your thoughts about that Charlie Munger interview before I share some of the other things out?
I'm not a fundamental guy, so yeah. Unless it's a company, like So, and Bitcoin doesn't have much history, right? It only started after the Great Recession.
Yeah.
We don't know how it'll act in a real economic downturn. That's all I'll say about that. But I thought you, as a, used to be a software developer, you would have more of an opinion on its white paper or the whole idea of having nodes hooked up together and forming a ledger. Have you read that white paper?
Vaguely, not in
Yeah,
depth.
you would have a better opinion than I would. I'm not a software guy, so.
Now, I think there is some utility from a software that blockchain perspective. From what I've read, I've read it very high level in terms of things that companies will be able to do in terms of keeping ledgers. But I'm just not sure how much of an investment it is. Now, you can trade anything. You're a guy that will totally understand that it doesn't even matter what the asset is. You can trade anything. But for the people that are looking at Bitcoin as an investment, I think those people may be looking at it wrong. What do you think?
I've heard so many people with opinions on it, and it's like, yeah, I don't see the long-term value in it. Yeah.
Do you know what the Tether is? Do you know what Tether is?
Yeah, I've heard of it. I've heard of it.
Do you know what it is?
So, from what I understood, it was a way for people to easily offload their Bitcoin into some dollar equivalent.
Okay.
Right? So like you can have a broker and you can buy and sell stocks and it'll go back into dollars. And the thing is, the whole world runs on a euro dollar system. Euro dollar, not meaning like the euro in Europe. It's actually, I don't know why they call it euro dollar, but the whole fundamental of a euro dollar system is that everything is backed by the dollar across the whole world as a reserve currency. Have you heard of the dollar milkshake theory?
I have not heard of that. I'll look it up.
Look it up. You'll understand the euro dollar system if you understand that thesis. And then going from there, then you can understand what Tether is trying to do. It's trying to make a euro dollar equivalent in the crypto world, because Bitcoin cannot be the reserve crypto right now. The dollar is still the reserve of reality. So if there's a crypto equivalent, it's not there yet.
Okay. Now, from what I've read, is that Tether is a stable coin. I know some of the people in the audience are probably talking about like a Caribbean or an Africa or something. But a Tether is apparently a stable coin. Are you familiar with stable coins?
No. I mean the idea is it's pegged. I think that's that's the basic idea.
It's basically it's pegged to the dollar. It's a fix. It's fixed, so it's not floating.
It's not
so
floating.
It's right. That's very interesting. I found it to be very interesting.
Now, I think an equivalent of a stable coin is, look at the Chinese yuan, Hong Kong dollar. Another stable coin equivalent would be like Panama. Like Panama is basically the dollar. They use dollars, actually. They don't even use their own currency. So you can look at it that way. Like, why are these places like pegging themselves to the dollar and keeping it that way?
Right. That is very interesting. Is that just me off the top of my head? And again, I practice a bit of finance. So
yeah, that's why I told CT to get a finance program going. I'm not even that well versed, but everything is tied to currencies and bonds, debt. And it's like, if you don't know that, you can't talk about Bitcoin, stocks, or anything, because they're all derivatives of a lower level, a more core, a machine code. Let's talk in computer science terms. It's just like there is an underlying thing running the whole system, and we're just talking about the crap that's on top without even understanding the foundations.
Well, I think if you were to, let's say, you're familiar with options, right?
Yeah, kind of, not really.
Yeah. If you ever bought a house and you put earnest money down on the house, You ever bought a house before?
No. Mm-mm.
Well, if you buy a house, well, let's just say you probably rent an apartment,
Yeah. Okay.
and you put the deposit down on the
Mm-hmm.
apartment. The department, in effect, is an option, right? Because you don't have to move in. You can
Yes,
move
that's
in now
right.
that you
You are right. Okay, that's a good way of explaining it. Yeah, it's like a down payment. It's like yeah. Okay.
Well, it's not even a down payment because the deposit is your option. It gives you the right to move in or the right not
Mm-hmm.
to move in. You can back
Right.
out. You can say, hey, keep my money. I chose not to move in. Fine. I exercised my option not to move in, or you could exercise your option to move in. But the underlying asset is the apartment or the house,
Yeah.
right?
Right.
So if you can create options off of any underlying asset or if you're trading stocks, you can have call and put options, but the underlying asset is a fractional ownership in that company. That's
Yeah,
more or
it gives
less.
you the right. It gives you the right. Yeah.
But with Bitcoin, there doesn't seem to be an underlying asset anymore. And more I think about it, the stablecoin Tether is pegged to the dollar. So if you're trying to escape inflation and you're pegging your stablecoin to the dollar, I don't know how you escape dollar inflation, but nevertheless, um, let's go into a little bit on Tether because I've never heard of Tether before. And so this article about Tether, and I bet you most people in the audience probably are not very familiar with stablecoins. They may be familiar with the downstream Bitcoin. But before I get into that, I want to ask you a question. Have you ever heard of gosh, I forgot the question I was about to ask you. Are you familiar with the Sam Bankman-Fried scam?
Yeah. I was predicting that too. I mean, he straight up said he was a Ponzi schemer. Like he had a long interview, and he essentially just basically admitted it.
Is that right? I
Yeah,
didn't know
dude, look
that.
it up. Look it up. Sam Beckman-Fried interview Ponzi, and like he just had an interview with this guy, and the whole interview was basically him describing his scheme. I was like, come on, bro.
I'm pulling that up right now. I'm going to pull it up. But before we get into Sam Bankman, we'll get there. I think that a proper understanding of what a stable coin is. From my understanding, you correct me if I'm wrong, these companies like FTX or whatever,
Mm-hmm.
they'll have their own stable coin
Right. See, correct.
pegged to the dollar. And
That's right.
supposedly they're supposed to be backed one for one dollar to Tether, as an example of Tether is a stable coin. And we'll see
Right.
here. And so most people don't trade the stable coins, they only trade the
Yeah,
down
because like I said, the
coins.
stable coin is a liquidity pool. It's just there. It's like the euro dollar equivalent. Everybody that has assets go back to the dollar. So like look
Right.
at all the crashes we have. When stocks start crashing, bonds start like imploding, people don't run to gold. They can't sell and get bars of gold. That the liquidity is not there. You have to get physical gold.
Right,
And
right.
so what's the equivalent of a gold? US dollar. So that's why the dollar always like gets pumped temporarily during like panics.
So let's take a look at this for the people that don't know. Tether is what's known as a stable coin. Stable because one tether is supposed to be backed by $1. Now, for those of you that may have some financial understanding, one of the things you understand is that deep down in the weeds, the regulatory, there's supposed to be checks and balances to make sure that their balance sheet is keeping in line with what they're representing this tether coin. So if they have a million tether coins, that's $1 million. They should have $1 million in cash or cash equivalent holdings. But these companies are able to just print tether the same way that the United States can print US dollars. The company, and here's proof of that. The company that issues the currency, Tether Holdings, takes in dollars from people. You remember Tom Brady and a lot of athletes were involved in the what was it, the FTX scam. A lot of those guys gave money in exchange for, more than likely, not even Bitcoin, but the stablecoin Tether, or in their case, I think it was FTC or FTX. The company that issues the currency takes in dollars from people, so it's real money, who want to trade crypto, and credits their digital wallets with an equal amount of tethers. So in this case, you've converted your dollars to a stable coin that is being minted by these people. That should be a very, very, very big red flag for anyone paying attention. That you're turning your hard-earned money into something that has no value on the street, a tethered stable coin. You couldn't take it to the store and get a loaf of bread. That's very, very interesting. Did you know that? Yeah, correct.
Yeah, that's right. You're absolutely right on that. So what the thing is FTX has their own Tether equivalent. Another one was Solana. Have you heard of Solana?
Yeah, I've heard of Solana.
Solana had the same problem. It blew up too because it had its own Tether, and Solana, yeah, and the peg fell apart. Once the peg fell apart, everybody started selling Solana, and then Solana just imploded. So they had to make a new Solana. So the new Solana is going back up now. So all these guys keep jumping around. It's like, what the fuck?
Has anyone ever heard in the chat? Has anyone ever heard of Solana? Has anyone ever heard of Tether? Has anyone ever heard of stable coins? And if you have,
I think we're too boomer, man. This is Zoomer shit. This is like digital nomad.
do you think, so are you saying that the young people know more about this, or the older people?
Yes, I barely know this stuff. I just know it because like I at least try to follow, but you know, I just get like the clips. Like I get the headlines. I get like I follow it enough that I catch all the important points. But these guys, that's all they do. They hate stocks. You talk to a Zoomer, they're like, stocks are a ripoff. Stocks are run by Wall Street. Yeah, of course. But you know, at least I know the scam there. I don't know the scam here. What the fuck is this scam?
Before we get too deep into it, have you heard of mining, Bitcoin mining? Do you understand what that is?
I thought you would try to help me understand that as a software guy. This is the most important key point. What is mining? Mining is proof of work. And then you have, and then Ethereum changed to proof of stake. What is the difference between proof of stake, proof of work? I don't get it. That's basically something that only a computer scientist could explain to me. Because every time I try to read a dumbed down version, I already can tell this is way too dumbed down. I need to really understand this to explain it well. I haven't got good explanation.
And I haven't read deeply into it, but from what my very, very rudimentary understanding is that there must be some hash keys. And the miners are trying to decode these keys to add that transaction to the ledger.
Right.
That's my very rudimentary understanding. And if someone else is on here in the chat that can correct me, feel free. Or if you want to come up on the panel, I see Richard. He's very familiar with Solana and stable coins. So and he's probably a younger guy than us. So I would love to hear his opinion. But from my perspective, I'm already seeing a scam here. And just like the FTX scam blew up, if they're taking in dollars and then printing out their own currency and giving you back that in exchange, I would love to be able to be in that business. I would love that business. You send me dollars and I'll send you back some John Galt stable coins.
No, we should make our own coins, dude. It's not hard to do.
Right. We created the dog coin, the Doge coin. You remember that one? Right? I mean,
I remember that. Yeah.
I think they're even making jokes. They're almost flaunting the fraud in your face at this point. Just kind of their ignorance of.
The problem is desperation. It's desperation, man. Like people feel trapped, and I get it. Like I couldn't advise people to be like, oh yeah, stocks are the way to get wealthy. Like, because the reason why is because inflation is so bad that the normal gains you would get by doing a vanilla S&P 500 index fund is like, does that even beat inflation anymore? Like, it might not, because we're going away from globalization. Yeah, Richard's saying like, does it beat inflation? Yeah, for now. Yo, John, are you muted?
Oh, I'm sorry. Yeah,
Oh shit, yeah.
I think for the people that invest in stocks,
Mm.
unless you're rich, and I don't even think rich people invest in stocks, I think you'd be better off paying off your mortgage, paying off your car.
Well, rich people, you know what really rich people do? They just buy leaps. So if they do options, they just buy leaps. It's just they just leverage their long-term positions.
Yeah, well, if you're rich, you probably have stock compensation if you work for a
That's
company.
right. Yeah, you get your RSUs, you get your little things, and you can dump it into an IRA and then get out cash like tax-free, right?
Well, the bigger thing I was thinking is, if you look at someone like Elon Musk, right? He has a lot of wealth tied up in his Tesla stock. Well, that's very risky because someone could tank his stock, even if the company were doing well, right? So what you want to do is hedge your Tesla stock with maybe selling options or puts or something like that. Or they'd probably even be more esoteric than that. But there are many financial strategies that you can do to minimize your exposure to a stock, because he probably has the bulk of his wealth in one stock. So he's not very diversified in that sense. So he can get out of that with options and derivatives. But the average person, I don't think, should be in stocks. This is my own honest opinion. If you're not rich, you got bills, you have cards, you should just pay off.
Yeah, the average person, yeah. But like if you're upper middle class, well, funny thing about middle class is that like six figures is not really that middle class anymore, actually, in some places. Like I live in California, six figures is a joke. Like you got to be making top six figures.
Yeah, that's true. Let me ask you this, get credit. Do you have like a 401k?
Yeah.
What did your 401k do last year? What was your return?
I rotate around, so probably a little bit better than S&P 500 returns, because I actively try to manage it. So I move it around between like emerging market, small cap, back to yeah.
But what about net of fees? Do you know how much fees?
I don't keep track of it that much, honestly. I just don't really like care because it's something I can't pull out.
That's right. The fees are so hidden to you.
Yeah, I know what you're saying.
The average person who's poor, got credit card bills, he could be paying off his credit card bills with the fees in his little measly 401k. Because the portfolio manager is going to charge him every year. He doesn't see it. It's a hidden cost. Very few people can identify it. But they're paying them. No one's managing these portfolios for free. So back to Bitcoin for a second. And here's some things I just guarantee people did not know. That once you have tethers, people can send them to current cryptocurrency exchanges that use them to bet on the price of Bitcoin. Ether or any of the other thousands of coins, at least in theory, Tether holdings hold on to the dollars, so it can return them to anyone who wants to send in their tokens and get their money back. Now, if my memory serves me correctly, this is why FTX collapsed. Because once they face a margin call, once people want their money back, and they don't want to hold the tethers anymore, the Tethers don't have the money to pay them. They don't have the dollars to pay them back. And so that is where I think this is a Ponzi scheme, is that the government is not keeping track of these companies to make sure that they're fully capitalized. And anytime someone wants to call in their Bitcoins or their Tether holdings or their stable coins, these stablecoin companies oftentimes do not have the assets because they printed so many of these Tether stablecoins. Oftentimes, and they use the Tether stablecoins to buy the Bitcoins. And I'm going to get into that too, about how there's allegations that the whole Bitcoin market is a scam and being manipulated. Have you heard of this, gift crack?
No, sorry, I wasn't following.
Well, they were talking about how the whole Bitcoin market is likely being manipulated by a Chinese investor or a Hong Kong investor.
Okay, so a lot of crypto is used for money laundering. You know about Binance, right?
Mm-hmm.
Yeah, I mean that was literally Chinese money laundering because it was run by a Chinese dude.
Is Binance the one that broke FTX?
Binance was the one that broke FTX, and the government went after them later. He went after the CEO. I mean, his acronym is CZ. CZ. Look up CZ Binance.
Yeah, I think, let me see. CZ Binance. Let me share this tab.
Yep, that's him.
This is the guy you're referring to, right?
Yeah, that's my friend. No, I don't know.
Yeah, go on there for a minute. So, wait a minute, he was sentenced to prison? For money
No,
laundering?
he got a plea deal. He got a plea deal. Yeah, he got a plea deal. Yeah.
Wow, so he did 4 years? Oh, he got 4 months?
He didn't get the SBF treatment. So
now, what did he do with money laundering here?
he was running off the Bahamas or something, and then or I don't know. It wasn't the Bahamas. Maybe I always confuse him with the SBF because they were hip to hip doing the same thing. But
Yeah, I
one
think
guy
in the Virgin Islands.
Yeah, one guy was just doing it for himself, SBF, and one guy was just, and you know, some conspiracy theorists say like he was doing it for the Democratic Party, right? SBF and his family.
Yeah, I heard
ties.
that. Yeah.
Oh, okay, whatever. But for sure, like CZ is like for the Chinese government. That's him.
Get out of here.
Yeah. So you should look up the history of him. That's very interesting. There's a lot of deep lore.
So they're trying to say that his behavior seemed to focus on regulatory and compliance failures, while SBF's case hinges on direct financial misconduct and deception. That's compliance failure. So that would seem to indicate he took kind of a plea there.
Well, basically, all the government could get on CZ was that he was trying to get U.S. investors into his Binance operation. The problem is that the SEC banned him from doing business with Americans, and he was trying to get around that. And so that was his only crime that they could tie him to. But I think the real reason is that, like, come on, the guy was a Chinese fucking money launderer.
But listen to this. He's doubled his net worth behind bars. Damn, we can't read this. These people are
man, these guys are the real Al Capones, man. These are this is the Al Capones of this generation.
Yo, listen to this, man. What? He has a net worth of a staggering $61 billion still? This is 2024. With the prison?
Come on, John. We're in the wrong business here. We're in the wrong business. We need to make coins. We need to make dumbass coins, make Tethers.
Listen to this. He reportedly owns 64% of Binance coins circulating supply, or roughly 94 million BNB tokens. 84 million BNB tokens were allocated to the Binance family. This is just like FTX. This is just what you were saying. Wow. This topic is going much like I thought it would be. I always thought Bitcoin was somewhat of a scam. I just never did any research to look into
the funny thing is, like, do you know the lore behind Bitcoin at the beginning though? Like, there was a Satoshi guy. He was enigmatic. He's like trying to make all this stuff behind the scenes, and then he just disappears. And then now everybody tries to claim that I'm the real Satoshi. I'm the real Satoshi. It's like, what the fuck?
But he's not known as something, right?
No, because he kept himself anonymous. Whoever he is, he's like laughing at us right now. He's like a king troll. He just like let loose the idea of Bitcoin, let people do all the work for him, you know? And he's just sitting back waiting for his time to cash out.
Let me ask you this, and this thought just came to my head. You think Satoshi's real, or there could be like a government thing?
No, yeah, I think it is real. It's real, yeah.
Why do you think he's real if no one's ever seen him? What's the odds of that?
Man, because if you know software people, I guess, in Silicon Valley, it's just, you understand how people will just love new ideas. He could manage his social media in a way that he could get people to do stuff for him for free, right? You don't need a government anymore. You could social engineer people to do shit for you. It's that deep. Like that's why governments are afraid too much of this, because the internet gives you the ability to network with people in a way that they could never really do before the internet.
Yeah, no, I definitely agree with that. But the government could just as easily ban it.
Yeah, they can, huh?
It has been banned,
but they don't want to now, because they kind of see the utility of letting it fester, because they want to use it later on as like a trap door. You know what I mean?
Yeah, I mean, I can see that theory.
Because there's a lot of tech that was developed under the government's eye, and they just say like, let it go. It might be useful later on.
Let's see, we got a couple of comments here. Let me put those up. Compounding interest is very powerful. I'm young, so I'm building up a lot of index funds. So in 20, 30 years, I'll be good to go. Hey, Richard, have you ever heard of the rule of 72? Put yes and no if you heard of the rule of 72. Give credit. You ever heard of the rule of 72? Get credit. You ever heard of the rule of 72?
No.
Let me see. I learned this long ago in finance, some finance class years ago. Rule of 72. We're jumping around here, but that's fine. The rule of 72. Everyone see the screen? What is the rule of 72? The rule of 72 is a quick, useful formula that is popularly used to estimate the number of years required to double the invested money at a given annual rate of return. Alternatively, it can compute the annual rate of compounded return from an investment, given how many years it will take to double the investment. Well, let me just show it to you. So that may be a little deep there.
Come on, man. It's too early for the morning for me to think about
it. So I said, let me just show you a calculation. Here's how to use the rule of 72. If the gross domestic product grows at 4% annually, the economy would be expected to double in 72 divided by 4, 18 years. So basically, what is 72 divided by the interest rate you're going to get determines how long it will take to double. It's the rule of 72. All right, fair enough. Let's go back to, well, let me just go back to the comments for 1 second, see if Richard had ever heard of the rule of 72. Richard, you think you heard of it? Okay, good. Every 7 years, your money doubles, basically. Well, it depends on the rate of interest. As you saw, 72 divided by the rate of interest determines how fast your money will double. You cannot ban Bitcoin, sir. Please, let me see. I think who banned Bitcoin? I know there was at least one country that banned it.
China. Yeah, China did.
Well, yeah, that's right. We led off with the interview with Charlie Munger talking about how China banned it.
So like you have to understand like FTX and Binance what they are. So Rashu is basically saying because FTX and Binance are centralized exchanges, okay?
Mm-hmm.
So centralized exchanges act like how we have brokers today, how we have like NYSE, New York Stock Exchange. If you're a purist, Bitcoin should not need these centralized exchanges. Everybody should be able to trade and buy from each other peer to peer.
Right. Yeah.
Decentralized. So the problem with decentralized is like how we have to have Tether, because if I want to sell all my Bitcoin one day and go back to dollars, I can't do that quick enough.
Right.
That's why you have to have centralized exchanges, and that's why you have to have tethers. Because if someone one day said like, "Hey man, I gotta buy a house, and this nigga doesn't want to buy Bitcoin from me to give me that house, I need my dollars right away," and that's why you have centralized exchanges.
I definitely understand that, but shouldn't you be able to buy and sell Bitcoin between people without?
It's not fast enough. It's so slow, dude.
Is that because of the mining?
Yeah, it's like all that. That's why I was waiting for you to explain that to me. I like, tell me why it's slow. Tell me why all this stuff. There's too many nodes. It doesn't scale well. Like, what's the graph look like? You know what I mean? That's computer science stuff. Like, if you have too many nodes, like, how can you sell like efficiently when? Right? This is like a sorting algorithm problem or some shit.
Yeah, like the big O's.
Yeah, the big O. This is the stuff I don't understand. Like O2A is not log O. It doesn't scale.
Man, you know, for this show, I didn't even get into the mining because it seemed like a whole nother issue in that the amount of power. And I remember reading in one of the articles just the sheer amount of power that it would take to mine the Bitcoin. That's where all the money is being made. If there's any money, just
I love buying and selling Bitcoin mining stocks, dude. That's my
Bitcoin mining stocks.
Yeah, dude, that's how I made big bucks, because it's like it goes up 100 times more than Bitcoin. When Bitcoin goes up like 10%, mining coins go up like 100%.
So wait a minute. So are you investing in the mining company or are you investing in a mining coin?
I invested in the company. They have stocks. Like
What's
yesterday, look at BT. BT went up 30%. And Bitcoin only went up like 1%.
BTB Real Estate Investment Trust?
No, BT. Look at the ticker.
BTBT. Oh, I'm sorry, BTBT. Stop. Bit Digital. Is that what you're talking about?
Yeah.
So this is like one of those like micro, like one of the mini. What is this trade on? Probably Q sheets or something. What's it trading on here? The Nasdaq. Sure.
Yeah, it trades on Nasdaq. I think it's up 6% right now.
Yeah, I see it. Wow. So
yeah, yesterday it jumped up.
What do they call those small price stocks? Those are the
penny stocks.
Well, yeah, this is not necessarily a penny stock, though. Let me share this.
Yeah,
it's not necessarily a penny stock, but $3.60. So you trade Bit Digital?
No, I just trade. There's a whole bunch of these type of companies, and you just trade all of them. There's like BITF, there's Mara, there's CLSK, and then you can just trade all of them on the normal stock market.
Let's see here. Bit Digital. Anyone heard of Bit Digital? I haven't heard of it before. I'm looking for a summary of the company.
See, that's why I got to make my own channel or something and make some live streams. I'll be like, hey, this is what you got to buy today. Fuck yeah, that's day trade, baby.
Yeah, I'm telling you, because you know a lot of these stocks, a lot of these things, you have a pretty deep knowledge of this stuff here in terms of
Bitcoin. But the thing is, like, I'm so old, like, this is just for fun, you know? I don't need to do this. Yeah. I just like to do long-term investments, but you know, I get bored and go like, let's make some little cash, let's gamble, and I'll just be like, let's do this one.
I can't even find a summary on this company. So do you buy, in terms of your investing, I know you say you trade, but do you trade options or you trade the
No, I
underlying?
just trade because I have so much cash. I don't need to do options. Like,
I see.
yeah, it's just like I don't want to understand the
It'd be more
Greeks.
fun trading. You got a lot of cash. Wouldn't it be more fun trading options? The prices, the
Yeah,
price
no,
movement.
but that's just like degenerate, dude. It's just like these people are like insane
Why do you say it's degenerate? Like if you bought,
because be,
and I'm
because
asking out of
it's
ignorance.
because like it's degenerate because like you're trying to do leverage with very little money, and
Mhm,
and then you have to understand volatility and timing.
mhm.
So if you let's say the stock goes up, even the stock goes up, you can still lose money on a call that you bought because you incorrectly timed it.
Yeah.
And you could incorrectly gauge the volatility. Like the volatility could be like really high and it just blew up your damn account before you could realize
Yeah.
the gains. And it's just like, this is stupid, dude. You're just getting into margin calls and all kinds of issues.
Well, definitely if you're going out on the margin, whenever I play around with stocks, and I don't play around with them much, I'll just buy like long dated options as opposed to,
Yes, that's how you should be doing it. But
yeah.
most people, when you do day trading, it's degenerate as hell. It's so degenerate, man.
Hey, so let's Bit Digital announced today that it has finalized an agreement to sign an existing customer with an additional 2,048 GPUs for 3 year term.
So you see the real benefit here with Nvidia. You see why Nvidia goes up with the AI and all this stuff. It's just
Yeah,
like soaking. These people are just soaking in all this ecosystem.
wow, 256 servers by Dell and authorized NVIDIA.
Okay.
So
This
this
is
is
this.
why NVIDIA is so hot.
So hey, hold up. I recommend everyone listening right now to buy utility stocks. Utility stocks are very boring. People don't
Yeah,
pay attention to them. So what's downstream from Nvidia and Dell? Electricity, right? You got to
yeah,
supply electricity. Hey,
yeah,
bros, buy copper stocks, buy utility stocks. Very boring stocks.
yeah. Let me
But
let me
buy,
see if I can find something.
yeah.
Let me see if I can find something about electricity here, because I did notice that in my research here. It's in one of the articles, and we're going to get to that. That's interesting that you mentioned that. Here it is. Check this out. The chief executive officer listed on Tether's website, J.L. Vanderbilt.
Oh, hey, you're not sharing the right screen, dude.
Oh, yeah, there it is. Sure it is. The chief executive officer listed on Tether's website is a Dutchman who lives in Hong Kong.
Oh, the Dutch. Man, those guys are just small hats, dude.
Yo, I think this whole damn thing is a scam. He lives in Hong Kong, and just like Satoshi, seems never to have given an interview or spoken at a conference. Oh man.
Oh man, it's the Flying Dutchman. It's the Flying Dutchman. He just disappears and shit. Oh man, this is a joke, right? This whole
Yo,
computer
this is a
simulation.
joke, bro. Did anyone know this? Did anyone know the background of some of these companies? I see Ryan is coming, and he probably. John, you're too old. You're definitely right. I'm too old. Probably a little too smart.
Oh, go back to T-bills. Go back to T-bills, John. Nah, man.
I'm
Fuck
just
the
going to stay out of the
T-bills.
way. I'm going to stay out of the way of all this stuff. But hey, what are T-bills and bonds earning right now? What the rates
T-bills
are?
get you. T-bills get you 5.5%.
That's pretty damn good.
That's very good. My mom's all in the T-bills. Because like I told people, T-bills, if you buy directly from the government, you don't have to pay state income tax on those T-bill interests.
Oh, that's right.
So I live in California. That's important to me. Other people who live everywhere else, who cares? You can just put in the money market fund. Money market fund gives you 5% anyway.
Rashid, why don't you put that link in the back chat? Well, I think they'll be able to copy that. Anyone in the chat, Rashid has a recommended stream for you to listen to. I'm just going through some of the comments. I thought you only mess with Vanguard indexes. I don't like indexes, to be honest with you. Back when I used to invest in the stock market, there was a company called Janus 20. You remember Janus?
I've heard of it. I've heard it, but I don't know. I don't know.
So it was run by a guy named Tom Marsico at the time. And I think he may own a basketball team now. He got really rich. And he had a notion of he would buy the top 20 stocks or the best 20 stocks. So it was called the Janus 20. And it made me think that why in the hell would I want diversity in my portfolio? I don't want any losers. I want all winners. Don't diversify my winners with losers, which is what an index does. If I'm paying you as a portfolio manager, I need you to pick the winners.
That's why that's why managed index funds are a waste of time. You should just buy an ETF. ETF has no fees.
You know what I would just do, honestly? If I were a long-term investor, and I'm not giving anyone any advice, I'm telling you what I would do. I would just look at the S&P 500, pick the top 10, 15 companies that I thought were good, and I just buy them. That's right.
Anyway. That's how you should do it. Yeah, right. Active investing. Yeah, that's all you should do.
And you can rotate them in and out percentage-wise, just as the index does.
Yeah, that's why I hate my 401k. I hate the 401k because I can't do that.
You can't do that, right? And I think there's a reason why you can't do that. One day I may even do a stream on that, like how 401ks are more or less a money pit.
You know the real reason they do 401ks though? The real reason.
What?
Because they want to take away your vote. You can't vote as a shareholder if all your stocks are in 401ks.
Well, yeah, that's part of it. You know what I think the real reason is? I've long, met people, friends who work jobs. They have 401ks. Some of them may have considerable 401k, 4 or 5, maybe $1 million. Who knows, right? But if you ask them, hey man, why don't you start a business? They don't have any money. Their money is locked up in 401ks and things like that. And now they're working all these IRS penalties and rules and withdrawal penalties and things like that. So you have the entrepreneurial class, many of them who have the ability to be entrepreneurs, kind of have like a golden handcuff, a future golden handcuff with all types of penalties and things attached to it to prevent them from effectively going out and competing with the companies that they work for. And that's why I think all the rules, who holds the 401k? You don't hold the 401k. If you want to borrow your own money from a 401k, you got to go through all these rules, pay interest and administrative fees. And if you don't pay it back, it's taxes and this and that. I just think that, I'll tell you this. When I used to work, I never would invest the money in the 401ks. I would just, maybe, sometimes I would just get their match, but for the most part, I just rather invest in real physical assets. But let me get Ryan up here.
Hey guys.
What's up, Ryan? Yeah.
You guys going in on 401ks, huh?
Well, no, we really started out on Bitcoin, but we found our way to 401ks. What do you have to say here?
I mean, I think it's the number one wealth building vehicle for the commoner, the common man that like maybe isn't too keen on investing. I think it's the number one wealth builder, right? So, and between the 401k, Roth 401k,
you mean like Roth IRA?
A Roth IRA. Well, they actually have a Roth 401k now too.
What the fuck is a Roth? Oh my God. I hate the IRS, dude. I don't understand any of this.
No, it's not the IRS. In my opinion, I think it is the financial companies that keep coming up with different products to sell you.
But at the end of the day, it's a phenomenal thing. Like, so if your employer, if you put in $1 and your employer puts in $1, right? They'll match, right? That's 100% return. It then gets squirreled away into an account that you can't touch till you retire, which everybody's going to eventually retire. It grows tax-free. Upon retirement, you no longer have quote-unquote earned income, so you're going to take it back out at a lower rate. I mean, it is a phenomenal way to accumulate a tremendous amount of money. I could take an 18-year-old, and I can make him a multimillionaire by the time he's 65 and he retires if he starts putting the money away at 18. It is a great vehicle to accumulate wealth. Building wealth, 401k is awesome.
I could take an 18-year-old and make him a multimillionaire by 35.
where's your index fund, John? We need to make an index
How
fund
you
and
gonna, hey,
a
John,
coin.
John,
By
I'm
the
telling
time
you,
he's 35, he'll be a millionaire.
well, you're gonna send them. Okay, so I'm saying I can take a common working stiff, right?
Mm-hmm,
And he's gonna be an electrician. He's 18, right? He go gets a
mm-hmm,
job.
mm-hmm.
I mean, just by putting away 10% of his money, if you look at 40 to 45 years at a 7% annual return compounded, I mean, use an interest calculator. And if his employer matches some, like you're talking about huge amounts of money. Because once you're beyond those 30 years and you get out to that 40 and 45th year, the compounding is massive. It's tremendous. 20 years versus 40 years is like 7 to 8 times as much in total value of a fund. So I
Hey,
don't know. I don't know, man. You guys, look, if you're
hold on,
putting,
Ryan. Let me respond to a couple comments here. We have a few comments I wanted to respond to.
yeah,
Richard, index is good for me because I don't feel like keeping up with the research. I just set it and forget it. I think that's the biggest problem. You know, the biggest problem is that a young man like yourself, seemingly young, doesn't have any better uses for your money than setting it and forgetting. You're a young man. You should have ideas and aspirations that you probably could put that money to work investing in yourself instead of investing in fractional pieces of paper by way of a 401k. If you accumulate enough wealth that you don't have anywhere else to put your money,
Boomer.
then I would say, go ahead and invest in paper and stuff like that. But if you got any kind of car notes, mortgages, I would put my
I
money
mean,
to work.
look, John, it is a like essentially by being in a 401k, you are electing to have someone manage this for you that's a professional. All these day traders, they lose on average, and that's the reality of it. I've tried day trading. I lose. I don't know what to buy. I buy it when it's too late. I've dabbled in Bitcoin. I lose because by the time you get on the wave's crashing. That's just
Well,
reality, Like it's.
let,
I mean,
let me respond to Richard here again. But John, the top 10, 15 are always changing. Look at PayPal, G, et cetera. You got to time it when they're at the top and bottom, which is very hard. It's doable, but difficult.
yeah,
You
it's
rather, you
yeah.
rather,
If you bought
go ahead.
Bitcoin 10 years ago, it's awesome. What's it now? 70 grand, 60 grand.
Yeah.
It was at 14 grand a year ago, John. A year and a half ago. Like, are you willing to deal with that volatility? And before that, it was at 60. It went to 14, right? Now it's back up at 60. Are you willing to like put 100 grand out there and stomach that volatility? I'm not.
Well, right. Well, I think you can buy fractional pieces of Bitcoin, but I think the thing is that this is your money. This is your hard-earned money.
I know. That's what I'm saying.
And here's the thing. Richard said he doesn't want to do the hard work, but you worked hard for it. And you're going to entrust Wall Street. And I know people, I hate when people say, well, refer to a movie to make an example of something, but we've seen enough movies on Wall Street about these people being criminals. And there are a million ways to Sunday that they can steal from you. They front run your trades, hidden fees and commissions.
Hey John, get
up?
that real estate in Dallas before the Texas Stock Exchange goes up. We're gonna front run everyone, dude.
Yeah, that might be a good idea. Or invest in something.
We gotta get into Dallas, man.
I mean, John, the whole country owns all these major companies, Apple, Microsoft, because it's all in 401ks. Like there's trillions and trillions of dollars in 401ks now, and I mean, look, I see what they've done for people, and I see how much you can accumulate in there, and it is, I mean, it's tremendous amounts of money, and so I kind of like leave the professionals to invest. They went to school for this. They study the market daily. When I've tried to day trade, I'm always late. I mean, here's an example. I bought a couple years ago. There was this TV stock that you could buy that you could gamble on your TV, and I'm like, oh, this is going to catch on. This is going to be huge. I put like $5,000 into it just to play. It's now worth like I don't know $400. I've just got a list of those I don't know what to buy. But Warren Buffett says if you buy good companies that are profitable, like McDonald's, like Apple, you know, at the end of the day, you know, look at it like you're buying a part of a company and not, you're becoming an owner in a company in a sense, right? So, you know, do you want to buy a company that's speculative? Do you want to buy a company that's, you know, a good company with good people? So I don't know. I think that letting other people manage it for you tends to work out better, especially if it's a Vanguard, you know, all your major companies, T. Rowe Price, Vanguard, there's a lot of good companies that do it, and they've made a lot of people multimillionaires, you know. So
Let
I
me
don't
ask you
know.
this question. Let me ask you this question, Ryan. Have you known anyone that has retired solely from their 401k holdings comfortably?
Yeah, I mean, yeah, I know. Well, so either 401k or IRAs, yes, I know. I mean, yeah, my uncle just retired from. He had an IRA. You know, I mean, all it is a tax vehicle to avoid taxation until
Well, I'm
you're
saying,
old enough to pull the money out.
was he getting Social Security as well, or pension, or was he solely just taking
I
what's
mean,
called?
well, you automatically get Social Security regardless of whether or not you have a 401k. But so he gets both. But I mean, he had a couple $1,000,000 in his IRA.
Now,
So,
how old was he?
I guess he's like maybe 72 now, and he probably retired when he was 66 or so, roughly. He's in Florida.
He worked a long time. He worked a long time. 66. That's
Yeah, I mean, he was. Yeah, he has a lot of stuff he did career wise, but yeah, I mean, this is a good. A lot of people retire out of, and the thing is, like, you could even go, you could go, and by the way, the 401k and these IRAs now, they're letting you take money out for a first time home buyer. They're giving you a little bit more latitude with them.
Ryan, I don't mean to interrupt you, but listen to the wording that you use.
Yeah.
They,
Okay.
I guess that's the company or the government,
So what
are
I mean
letting you.
yes.
Hold on. They are letting you. This is your money. But they are like, listen to what you're talking about.
But they're letting you take it out without penalty of withdrawal, right?
And that's the next thing. It's your money, and now you got all these penalties.
Well, okay, so let's say this much. All the 401k and IRA are, the reason they are what they are is so that to motivate the public to save for retirement. But you don't have to do that. All they are is mutual funds or index funds that are over in this other category for tax savings, right?
Mm-hmm.
But you don't have to. You could just buy money market funds. Like I buy money markets. You can just buy mutual funds today, right? But the thing is, then you have someone else managing what to buy, what to sell. Buy Amazon, buy Facebook, sell GE, sell blah blah blah, right? And that way you don't have to figure it out. You can look at. I mean, here's an example: T. Rowe Price Blue Chip Growth Mutual Fund.
Yeah, I remember that one.
It's been around since 1993. It averages, I think, it was averaging 12%. I think it's pulled back from there. But, I mean, people have been giving these people money since that long and making 10 to 12% on average. There's certain funds that are phenomenal, you know. That's a little bit more. Go ahead.
Let's look at Stanley's question here. Weren't 401s popular with big business because it replaced defined benefit plan? That is true. That is true. 401ks are the defined contribution, and it replaced a lot of
pensions.
Yeah, basically, a pension is the defined benefit, basically.
It did two things, right? So, A, the pension stops when you die, right? Mm-hmm. The 401k, if you have enough in there.
No, not for me. Not for me.
Why not for you?
Yeah, that's true. They don't always stop.
My dad died. He had a pension. I get his pension now.
Okay, that's
survivor benefits.
Do you see that? Woo! I'm riding good, baby.
But generally speaking, it's hard to store up assets in that. A lot of them don't do that. A lot of them you die and it's over, right? Or you'll get spousal, right? So, but with the 401k, if you have 4 or 5 million in there, you retire. Let's say you deplete it down to just $1.5 million. Your kids inherit that, right? You can store wealth in the 401k.
But Ryan, I think the other side.
You got to get trust though.
I think the other side to look at is if you don't make a lot of money, let's say you make $50,000, not a lot of money, but if you had a pension, that pension would be worth about $1 million upon retirement, assuming you live 10, 15 years with the included health care and the payments every month.
Yeah.
That would be worth about $1 million. About the equivalent.
But understand, John, like I know I agree. So then you look at like the benefits based on your income, right? So, you know, for lower wage workers, Roth 401k, Roth IRA, or pension would probably be preferable, whereas higher wage workers, you know, 401k with matching would be better, right? That's why there's a whole financial advisor industry. But I'm going to tell you that, you know, I think and I want to say that even pensions, if you have a pension from the county, from the state, from a company, what do you think the company's doing with the money?
Say that one more time.
What do you think the company's doing with the money for the pension? So in other words, they're saving for your pension. They're and by the way, they don't just they take that money out of your check, a percentage, and then they're not just sitting on that money. Most pensions are tied up in the stock market.
Yeah. And other assets, in other asset markets. You know?
Yeah, I mean, because you know, like, so many teacher pensions are tied up in investments. Look, all these investments were tied up. Bernie Madoff, right? A lot of the money that he stole, $50 billion of losses there, right? A lot of them were firemen, teachers, public workers. Like he ripped off a lot of people.
Yeah.
It wasn't just a bunch of rich people. Like, I mean, the common folk got burned by this guy, you know?
I would have rather been ripped off by Bernie Madoff than a Bitcoin scam, because at least there was some money. There was some money kept. With the Bitcoin people, you get a Tether, right? FTX holding. FTX holding.
Look, Rashu's jumping in. Look, he's jumping
in.
in.
Yeah, why would Rashu jump in here, man? Because Rashu, you can Rashu, I think, is talking about the technology, and I think there's some value there. But the Bitcoin in of itself is a long-term investment.
You've been around longer than you, Rashu. You were born during the Clinton administration, I think. Just kidding. So,
right, King Shinar, Rashu says to Rashu, he says Bitcoin is not an investment. I think that many people don't understand what Rashu understands, and they think it is an investment.
Nah, well, he likes it. He likes it. I talked to Rashu outside of YouTube, and we've talked about it, and I'm just nervous about it because it is, you know, I can't define it. You can't spend it, and then people get in it, they put money in, and then, you know, where do you get out? Now there's capital gains on it. There's a lot of complication, and I just can't see it undermining the U.S. dollar as the reserve currency, and the U.S. letting it happen. You know, I don't think the government's not going to let that happen. And then also, there's been that FTX collapse. You've got all these coins they come out with all the time, and then they just implode. So, you know, I don't know enough about it to put any more money in it than I've already wasted putting it into it. So you know, but. I mean, I rolled the dice on it, John. But, John, if you don't understand it, then why would you invest in it?
I think, like many things, it's hype. And people are I think Jeff Craig mentioned it at the beginning of the show. Many people at their wits' end as to what to do. And so they're more apt to take flyers on things that don't even make sense.
Yeah.
You know, I bet you that there are many people investing in Bitcoin or whatever, don't understand the risk. And when I'm talking about the risk, I'm not talking about the price fluctuations of Bitcoin. I'm talking about these stable coins run by companies that could very easily collapse overnight. As I showed you, the CEO, he's not even in the country. He's in Hong Kong.
Look, Rashu's getting heated up. He's starting to pop in a lot here. Look at all these little comments.
Well, you can jump on. And again, we're not criticizing the technology.
No, he knows all this stuff, man. He's like
I think he knows
all this. Yeah, he knows all about it. But I think you do have to pay capital gains on. He said you don't have to pay capital gains on.
Yeah, they used to allow like crypto gains to not be taxed, but I think they just changed it.
Rashu said he had to work. No, I think if you're on any of the exchanges, I think that there is tax on it now. I don't think it's
Yeah,
know?
there is now. They changed it. IRS changed it. Before you didn't even have wash sales before. Did you know that? You could trade and not even get a wash sale.
Huh.
So you could day trade like a motherfucker and take your losses and cancel all your losses out with the profits.
Yeah.
That was like so cool, dude.
Wait a minute, you say you can do that now or you can't do that?
Before there was no wash sales for crypto. You trade crypto, day trade, you could like have all the losses cancel out your gains and there'll be no problem. You don't have to wait 30 days.
Mm.
You know,
that's a big deal. That's a big deal.
Yeah, it is. Yeah. You can do limited management inside of 401k, can't you?
Stanley's correct. Yes.
What is that? Well, you get the kind of self-manager portfolio.
So no. I responded to him. You see my reply? Like some 401ks allow you to buy individual stocks now. Yeah.
Oh, okay.
Well, or you can buy like 401k. You can pick which. So like your employer will have multiple options. They'll have like retirement and a target date year, which that is that's usually the way that. And again, all you're buying is mutual funds or bonds or something, and it goes into this bundle called a 401k. So you can even buy blue chip gross mutual fund.
Yeah, that's what I do. It's boring.
You can split them.
Yeah.
But look, you got to figure. Just let's say you just if you put in, let's say you make $100,000, you put in $10,000 a year. Like if you look at that, you're going to contribute over 40 years, and I'm just doing average here. So what's that? 400 grand, right? Your employer matches. It's so let's say a percentage. So you got 500 grand you've contributed, right? You and your employer. It's worth $2, $3, $4 million by the time you retire because the compounding is so much, So, but you can do limited management. But you can only I'll try to trade in and out of my 401k, but there's a time limit. Like I can't just buy today and sell tomorrow and buy tomorrow.
Yeah, you have to. Mine's like max out 3 times per quarter or some bullshit like that.
Yeah. So, but you don't want to be trading it all the time because again, we're not professionals unless you're a professional trader.
Well, wait for my channel. I'll be like, oh, buy BT yesterday. Hey, I'm in Hive today, buddy. Hey, Hive is up 14%. Woo!
Hey, Get Craig. We have a question from King Shenard. Well, not a question, but a comment. What do you think about that? Yeah,
you have to do that. You have to, before you enter a trade, you have to say like, well, where's my limits are, and I'll get into that later. I mean,
well, he's talking about options too. Like,
no. It's in general. Like, you should before you enter any kind of trade, you should know when to get out of it. Like, if it's losing, look
up options.
No, I hate options.
I like options.
That's why it's degenerate. That's why I said it's degenerate. This is the real reason.
Dude, there's a lot of different things with options, though, man. Like a lot of these hedges.
I know. That's why you can't compete with them. That's why I say don't bother because you don't have the math skills. Can you do a partial differential equation while you're trading in your head? Like a PhD in mathematics? You can't. You'd be like, ooh, what's the Greek? What's the delta? What's the gamma? No, you can't. You're gonna fail, bitch.
Hey, Get Craig. Hold on, Get Craig. You ever heard of Black Scholes and all that?
Yes, I have. See, that's why you ain't gonna make it. You don't got no PhD in math. Your IQ is like 120. Your IQ is 120. You ain't IQ ain't for 140, 150.
You ever heard of Black Scholes before?
No,
yes,
I haven't heard
yes,
of it.
yeah. It's yes.
Has anyone in the audience ever heard of Black Scholes? I'm really curious. What do you think?
What is it? What is it exactly?
Let me share my screen. I'll tell you. I learned this back when I was taking the CFA.
I mean, I heard of Muscle Shoals.
Oh, you took the CMT?
CFA. Yeah,
oh, CFA. All right.
Yeah, this was years and years ago. Let me.
Man, John. See, why didn't we do a fucking shitcoin together?
It may not be too late. It may not be too late. Let me see if I can share my screen to show you what Black Scholes is. It is a very arcane formula.
Oh yeah, this is the magic, bro. This is the magic.
I can't even say it.
Let's see if I can find the formula. As you can see, developed by Black and Scholes. Well, there's Merton too.
Value of derivative instruments.
What area is the formula? Black Scholes.
Yeah,
option pricing.
Yeah.
Okay.
So
this is why you fail.
Yeah.
You gotta do it in your mind, bro.
Yeah, it's like a two-legged strangle. It's like a two-legged strangle. All the options traders say things like it's a two-handed strangle. Like they have all this terminology.
They have a cheat sheet. If I find my cheat sheet in my computer, I'll give it to you. You can post it up. Yeah.
Yeah, it's a two-legged strangle. It's a bull.
Yeah,
It's
yeah,
a bull
but the cheat
switchback.
sheet just gives you like such a basic idea of what they're doing. The guys with this is why that all the quant traders, they hire all PhD math and engineering students.
That's right.
Because they have the math skills to do this in their mind while they're trading. You can't beat them. You're just like fucking a retard.
Yeah. Well, I think that computers are doing these calculations now, for the most part.
Yeah, AI is taking over.
I think what I used to work at like a damn if I tell them, but I worked at like a company that had a trading desk. I worked in the middle office, so I worked in the treasury department.
Did you front run my trade, John?
No, I didn't front run. You may have. But it wasn't like a financial firm like on Wall Street. But it was, like they had a trading desk, so let's put it like that. And they mostly traded swaptions. You know what a swaption is? Anyone know what a swaption is?
Hold on.
Nate, anyone know what a swaption is?
A swaption?
Yeah, a swaption. I'm
assuming is where you would, where you would trade options, but to avoid taxation. Like a muni swap. Go ahead. What is it?
I'll definition for you. Here's what a swaption is. You able to see my screen?
I have to wait for it to come up on the television.
All right, no problem. A swaption, also known as swap option, refers to an option to enter into an interest rate swap or some other type of swap.
But isn't it mainly to avoid the taxes?
No, it's a way to like artificially convert, say, a fixed rate obligation into a floating rate obligation, or vice versa. Right. So I could issue T-bills, which are short.
Yeah.
And then I could put this, I forget how it worked now, but you could sell a swaption or buy a swaption that would convert that interest rate that's short into a long-term rate. And that premium you pay would be for the benefit of converting that.
Gotcha.
So, there's a premium on the option.
Yeah.
Swaption.
Gotcha. Okay.
And
so basically, it's like an adjustable mortgage that you can lock in.
Right. So
in a sense, right?
Right. If you had a bunch of mortgages that had, a duration of, let's say, 8 years or whatever.
They're arms, and then you can lock them in at some point for a fee. It's the same thing, same idea.
Your finance on the finance side.
Yeah, that's what I mean.
Yeah, yeah. I'm talking about not from the person buying the home, but from the investors, right? So let's say Fannie Mae and Goldman Sachs or something like that.
Yeah.
They would trade these swaptions. Anyway, any other questions? And there are things you can invest in, such as property in the form like, hey, I didn't know that. Okay.
Well, you can do there's REITs, real estate investment trusts, but I'm just going to say this: if your employer is going to kick out a percentage, right? I mean, 401k is great because even if they put in 25 cents on the dollar, if you put in $1 and they put in 25% return immediately, that's invested, right? That the return is 25%. That's a great return. I mean, on your money, if a lot of times they'll go dollar for dollar up to a certain amount, right? My employer will go up to like $8,000 or something, or I don't know, approximate, right? So that's just free money. Like you put in 22.5, it's now 24. They're putting in 8,000. That's a 33% return immediately. That's invested over a period of time, right? So I just think if at least put in what your employer will match up to. At least put that in, right? So because that's all return. And then with the 401k, you can go conservative. You can buy. There's some 401ks are just cash. It just you're getting your employer's money, and then it's cash, and they give you a percentage of pay you an interest rate percentage. But I mean, the thing is, John, if you're in a high tax bracket, right? Like let's say you're making 250, right? Just that's not crazy high, but you're at 25%. So to make 250, the government's skimming 80 grand off the top. If you can avoid those taxes, even if you get the money and deploy it and buy property with it, you're still avoiding the tax hit up front. So I just think it's a great vehicle to accumulate money. Not that real estate's not good. It's good. But the tax advantages to real estate are, are they great compared to 401k? I don't know.
Well, the thing is, and I'm going to play this video by Rashu. I wish he would come up here, but I think he's working.
Yeah, he's working. That's what he said.
It's a pretty long video, Rashu. So tell us where we should start, or give us.
It's probably his Bitcoin fund. He's trying to get us. No, I'm just kidding.
He's come up with a stable shit coin himself. Hey, Rashu, tell us where to start. It's 18 minutes. I get some people that are retired, but I see a lot of young folks on here every day to use Stanley. Some dude, he's working. They'll be some dude. Some dude by the magical Bluetooth earbuds. I think he's talking about working. Kimmy Cakes, if you can come on. If you haven't heard the intro video to the show, it was Charlie Munger, long time.
He's awesome.
Famed investor. Did you hear the beginning of the show?
No, but I know Charlie. He's Berkshire Hathaway. I've been watching him for years. He's dead now. He just died. I don't know if you knew that.
Yeah, he was 99. When he died, or 99 at least when that video played. And basically, he was saying that he thought he called crypto coins crypto shit or something like that. He wasn't a strong believer in it.
Well, Berkshire, they're not like Berkshire's thing is if we don't understand it, we're not putting our money into it.
Yeah.
They got money. Like, look, they bought oil when they knew that was going to go up in 2020 when Biden got elected. And I was like, why would they be buying these oil companies when Biden's all about environment? And sure enough.
Hey, man, oil futures contract went negative. You bought that. You got rich.
Well, they bought part of Occidental Petroleum in 2020.
Oh, yeah, I was in that. Yeah, I was in that one.
And I was like, why would they be doing that? And then because they knew that Biden would literally make it impossible to drill and it would drive up the price. So, I mean.
Hey, I'll tell you this. Look at what Biden's doing with natural gas right now. You can't export it because he's trying to stop building out the port. So buy natural gas companies, buy natural gas shipping companies right now.
Well, and what's it say? They didn't buy because they didn't control what it is.
Let me read this quote from Charlie Munger.
He's awesome.
This is a quote from Charlie Munger in the Wall Street Journal op-ed. Kim said she needed a kind of a Bitcoin for dummies.
Yeah, I do too.
And Kim, I would suggest you start off with stablecoin. Once you read about stablecoin, Google. I'll send you some. I'm going to put the articles in the back chat that I.
Do you have any of that? Do you have any Bitcoins, John?
Man, I sent some Bitcoin as a donation to someone, and so I have a little residual left over.
Okay.
But I've never bought any just for personal savings. No. So Charlie Munger says that he considers it a gambling contract with a nearly 100% edge for the house, which is entirely accurate.
Yeah. A
crypto token is a pathological edge case of a financial quote asset unquote, although it stretches its term to absurd with no income from economic activity. That's one of the bases of an asset, and no claim on any underlying assets. The second basis, an asset, like you on an accounting ledger. That's how you would determine if it's an asset or not. The most eloquent description of this activity is from Martin Walker. Big crypto firms have been buying and selling nothing for so long, mostly in return for different lumps of nothing, that many have genuinely come to believe that taking nothing giving it a name and sometimes a story combined with a little bit of trading back and forth with friends gives nothing enormous value. Whether huge valuations for nothing tokens came from simply pumping up the market price of old school cryptocurrencies. Our current complex decentralized finance structures, the belief in the value of nothing makes it easy to lose sight of the fact of the underlying reality. It is the inflow of money rather than the technology, the community, the network of freedom.
That's true.
Crypto assets value. Wow, that's
I mean, there's no asset like it's true. What is behind that? Like, so in the Treasury, you got the U.S. government behind it. In Apple stock, you got Apple's assets if they go out of business. You know, they own a building, they own this and that, blah blah blah. What's behind crypto? Is there assets? There's no assets, right? What assets are behind crypto?
I'm not quite sure.
An algorithm, a mathematical equation. What's it worth? You know, I mean, at least when you have a company like you know, United Airlines or FedEx or a steel company or Apple, whatever it is, there's actual hard assets. They can liquidate the company. There's something left. The belief in crypto's value is the only asset that crypto is. You know, from what I can tell. So, but anyway,
I want to share one more quote, and then we'll have last words. But this is something that I think Get Crack mentioned for you guys that are looking for some investment pointers. Again, I'm not telling you what to invest in, but here's some ideas.
No, we got to do a boilerplate, dude. You every time we do this, we got to do a boilerplate. SEC is gonna like fucking fuck you up, dude. We have to say we're not investment professionals. Blah blah blah. Oh, safe harbor, safe harbor. SEC, don't fucking fuck this channel up.
No one's giving you any advice here. We're just talking about Bitcoin. Gary mentioned electric utilities, and so you should look into those if you choose. He's not giving you any advice. Get Crack, I'm sorry. But let's look at one of the things that he mentioned, and let's see how it plays into Bitcoin. The point of this process is to make blah, 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 blah. Though the correct answer to these puzzles can be easily verified by anyone on the network, actually being the first to find the answer requires an enormous amount of processing power. We saw earlier how they bought so many servers from Dell with NVIDIA chips in there, and thus electricity, and out competing the rest of the network in the practical. And I think I want to see, listen, here's the interesting. The electricity expended mining Bitcoin and other cryptocurrencies is rapidly approaching 1% of global usage.
Yeah, that's
which
huge.
is greater than the total electricity consumption of many smaller developments. That is amazing. When you consider the push for green energy and the push for this and that, and yet these people mining these Bitcoins are consuming a considerable,
tremendous.
And we're not even considering AI. Once you add AI to it,
yeah.
How do you think? You mean AI will be doing the processing of these Bitcoins?
No, AI is the back end. So all the AI we're doing right now is not processing on your phone. It's offloaded into the cloud.
Yeah.
The data centers are running the AI right now.
We
don't have the tech. We don't have the tech. We don't have photonic semiconductors. Okay, semiconductors are slow. We don't have photonic technology. We don't have alien tech right now. All this alien tech bullshit is like, dude, we don't have real alien tech. So everything has to be offloaded to the cloud.
Well, that would you would. Well, yeah, indeed, but there are servers somewhere, right?
And that needs electricity. And when more and more people use ChatGPT, that's going to increase expenditures by at least 5% more on top of this.
Rashi wants you to play video, Jar.
Hold on, Rashi, can you at least give us because it's 18 minutes. And we don't want to too long here.
We don't have time to listen to. We don't have time to listen to Sailor. Okay, I'll give you a short synopsis. If you believe in Bitcoin, buy call options on MSTR. They buy Bitcoin.
MicroStrategy, right?
Yeah, MicroStrategy. Buy call options. Be like, hey, let's get some leaps here, and we got something.
Let me tell you something about MicroStrategy. Since you mentioned MicroStrategy, years ago, I used to do what do they call it? I used to build data warehouses and things like that. And so there was a French company named Business Objects, it was eventually bought up by someone. So I took an interest in the stock, looking at the stock. I think I played some options on it. But then MicroStrategy was a competitor to Business Objects. And I remember looking at MicroStrategy's accounting, their balance sheet and things like that. And I remember seeing, and I think at the time there was a guy who wrote for the street.com. His name was Herb Greenberg. And he was very critical of MicroStrategy. And he talked about how can a software company have such I think it was accounts receivable at the time. Most of the time when the software sends out, when they sell the software, that's it. They're getting paid. But they had a huge accounts receivable relative to say their competitive Business Objects. So what it came out to be was he was stuffing the channel. Stuffing the channel is like when you tell companies, hey, buy some software now, and then I'll deliver it to you later or whatever. But what that does is it diminishes, it's kind of cannibalizing your future sales. And he was doing that. And they ended up busting him down for that. I think it's stock, or he may have been called by the whatever, the SEC or whatever. But anyway, he's a guy that Michael Saylor, I'm not saying he's wrong. He's a very, very wealthy guy. But, I know he has some ethical challenges. So this is Michael Saylor here. Yeah, this is him. Okay. Let's play a few seconds and see.
You said speed it up. You said do it at one.
That's right.
You need 10x this guy.
Let's start off with 1.5. All right.
God damn it.
No, you want to get a problem. The dollar is weakening.
Oh, there it is.
The auction's getting sucked out of the rooms. The point of Bitcoin is to fix the money. And money is energy, and energy is life. And if I keep sucking the energy out of the economy, I'm sucking the oxygen out of your system. Either under the best case, you perform poorly. Under the worst case, I suffocate you to death or freeze you to death. That's the problem. That's why empires collapse.
Ladies and gentlemen, in the world of Bitcoin, few names shine as brightly as that of Michael Saylor. With a career spanning decades and a reputation as one of the most prominent thought leaders in the Bitcoin community, Saylor has become synonymous with the digital currency revolution. A man of remarkable foresight and unwavering conviction, Michael Saylor's journey into the world of Bitcoin began long before many realized its transformative potential.
Hey, hold up, pause this. Hold up, hey. Dude, I have a tweet of Michael Saylor saying Bitcoin was a scam years before he got into Bitcoin.
Really?
I have it saved somewhere in my computer. I gotta go dig it up for you next time, dude. But I have it somewhere.
I started looking for it, but I'll play it up again. But it's an interesting thing. If my memory serves me correctly, Michael Saylor is buying Bitcoin through his company. I'm not sure if he's putting his physical assets, his own person.
Leading business intelligence firm. He saw beyond the surface of this emerging technology, recognizing Bitcoin's unique capacity to reshape the future of finance and commerce. But it wasn't just his early adoption of Bitcoin that set him apart. It was his unwavering belief in its power and the bold steps he took to make his vision a reality. Saylor made headlines when he led MicroStrategy into the world of Bitcoin investment, converting a substantial portion of the company's treasury reserves into this digital asset, a move that sent shockwaves through the financial industry. Today, he stands as one of Bitcoin's most ardent advocates and educators. With his unparalleled insights and eloquent articulation, Saylor continues to inspire countless individuals, investors, and businesses to embark on their own Bitcoin journey. In this exclusive interview, we have the privilege of delving into the mind of Michael Saylor, tapping into his vast knowledge and unique perspective on Bitcoin, the global financial landscape, and the profound changes yet to come. Join us as we explore the thoughts, wisdom, and strategies of a true visionary in business and Bitcoin, a man who is not just riding the wave of change, but shaping it with every word and action.
Okay, what is Bitcoin? Bitcoin is the first engineered monetary system in the history of the human race. Full stop. So now to explain it, the first question is what's money? The second question is what's the problem? And the third question is what's the solution? Bitcoin is the solution. Now go back to the beginning. What is money? Well, an economy consists of goods, services, and property. I want you to do something for me. I want that product. I want you to manufacture something for me. I want that house. I want that land. That's half the economy. Now the question is, how do I send 37 horses to you? And then how do we keep the books balanced? So you have to send me back money. Money is socio-economic energy. It's the energy, the backhaul energy that we use to trade with. If I can send you 10 bushels of corn and you can send me money equal to 10 bushels of corn, then we can trade with each other. So in the history of the world, human beings have tried different monies. We've used seashells. We've used copper coins, silver coins. We've used stone coins. We use glass beads in Africa. These are all types of money. Eventually, we got to settle on gold and gold coins as money, but gold was never fast enough as money. How do you move 10 tons of gold from here to there?
You said it's the wrong
ultimately,
video.
people use ledgers, and those ledgers were issued by...
Ross, you said it's
He said the wrong video?
What?
Yeah. He said, he said, it's in the video I thought it was. Look, this is not the video.
Oh my God.
We're gonna have to do this chat later, whatever the daytime that you can come on and give us a better.
That's what he said. Yeah, what's up with this guy?
You want us to know.
Whoa.
Look,
Someone says here Trump recently started endorsing crypto. I mean, yeah, I don't care who endorses it. This doesn't make sense to me.
Well, look,
personally.
let me ask you this. When's the last time you bought something with crypto? Number one. Number two, we already have digital currency. It's called, our currency becomes part of Swift banking, and a Swift banking system does literally.
Okay. This is great. This is great. This is exactly why I told you. Listen to dollar milkshake theory. Okay, John, I got my link up there. You see that dollar milkshake theory?
Put that up. Let me pull it up. Give me 1 second.
He's exactly right. Swift. This was before the Russia shit. This guy already knew.
Swift banking has been around for a long time.
Yeah, it has, but it's used as a club.
But again, it's a.
This is why the dollar milkshake theory dominates. This is why we have Tether, because dollar is the band. Dollar is the power. You control the dollar.
Well, okay. If you're gonna put money
in, hold on, Ryan. Let me read this right here. Are you able to see this? The milkshake dollar theory suggests that as central banks around the world mix their economies with easy monetary policies, as if they were bringing milkshakes from different flavors, the U.S. dollar would be the one to absorb the global capital, similar to sucking up a blended milkshake with a straw.
Yep.
Well, let's just say this much. So, monetary policy for the last 13 years, ever since 2008, has been fairly soft. So they've kept the rates low, which has, it's led to monetary expansion. It's hard to explain it all, but basically they've kept their foot on the gas a little too much, in my opinion. And I think the Fed's become somewhat political in that regard. Like, in other words, when they were doling out all that money over the last 3 to 4 years, that idiot at the Fed should have jacked them rates up like immediately when he found out that Biden was going to do another handout. Because otherwise you get inflation. He should have jacked the rates. He kept his foot on the gas for too long, right? I mean, stupidly. So, but I guess what I'm saying is the dollar milkshake theory. I don't know about that. I think that the world just invests in U.S. dollars.
Okay, John, in the private chat, look at the private chat. Look at my PDF. Open that up. I summarized the dollar milkshake theory. I wrote it down.
Where else do you want to put your money?
You talking about the Peter Thiel? You talking about the Peter Thiel?
No, one down. You see the next one?
You're going to put it into the yuan? You're going to put it into the yuan, the yen?
This is what I was saying at the beginning. Nobody's going to put, because those are pegged. This is why we still use the dollar. Yeah. So this is why they have Tether. That's what John's whole point of Tether. Okay, I summarized it for you.
Idea. It's at least it's anchored by something. Tether is. It's anchored.
Okay, do we have time to read all this in 10x? You got to read it fast, John. We don't have time no more. Our shoe's gonna die, man.
Can I jump over and paraphrase? All right, look, June 2020, Brent Johnson updating the dollar milkshake theory and $1,000 Gold Palisade Radio podcast. So there's a podcast. If I can copy that, I'll put it in the background for those of you who want it. Okay. Well, I guess that is the link. All right. I'll put this link in the background in case you want to read it. And all right. I'm going to try to paraphrase. It's pretty long.
And I was paraphrasing the whole podcast down to this.
Oh,
so I'm summarizing it of a summary already. Yeah.
Okay. From the movie There Will Be Blood, you know what? It doesn't matter if I own your land or not. Even if you have a milkshake, I have a long straw. I put my straw in your milkshake and I will drink it. When I saw that scene, I thought it was a very good analogy. Is everyone able? Let me make it bigger. Hell, I need to make it bigger for myself. When I saw that scene, since you wrote this, you want to read this? Get cracked?
No, you got to read this. My mic is not high quality, bro.
Cool. When I saw that scene, I thought it was a very good analogy for what was going on over the last couple of years, which I think could speed in the next couple of years. You know, post GFC 2008, 2009. What is GFC?
Financial crisis, global financial crisis.
Gotcha. The world Central banks and monetary authorities got together and they printed all these different currencies. They created a currency milkshake of pounds, yen, euros, reals, etc. For a number of reasons, I feel that the U.S. has the straw. For a few years, we were raising interest rates, and that acted as a straw, sucking up the liquidity that the rest of the world was providing. And that's largely why you saw the U.S. markets do what they did. But that's an interesting theory, by the way. But it wasn't just based on interest rates. Interest rates is the primary, but not the only driver. There's a number of other factors. We have the deepest financial markets in the world. There's a large amount of U.S. dollar-denominated debt outside the U.S. That is demand for the dollar. The Navy enforces the dollar as the global reserve currency, the rule of law, policies, trade, and tax. There's a number of other factors that can lead the U.S. to being one of, if not the most hospitable place for foreign capital.
Yes.
I think it acts as a straw that sucks up the global capital. And I think that will accelerate in a couple of years. I'm going to add some thoughts to this. My point is not that you shouldn't own gold. My point is that when it comes down, people need to have dollars. They don't have gold. They may want to have gold, and I may want to have gold, but to operate on the world stage, you need dollars. And when they had to choose between dollars and gold in March, they chose dollars. Now, if we got through that liquidity squeeze between gold and miners, went up faster than anything else, but when liquidity needs come, dollars are favored. I think we will have a short-term go back before we get to the heart of the chaos where the other economies will break down. And as a result, the U.S. will get some flows from abroad. The point I like to make with regard to the central banks has done, whether in the last 3 years or the last 10 years, is that nothing has been fundamentally solved. There have been new programs which will keep the problems from the last 10 years from happening again. Everything that has been done builds upon what has already been done. In other words, it probably makes the problem bigger. It does not solve it. They paper over it, extending loans, but it doesn't fix anything. Essentially, the long-term problem is the design of the monetary system itself, because all money is loaned into existence, and because we have a fractional reserve banking system. And for that kind of system to continue, you have to have a high level of velocity of money, or you need to have an extension of new credit. You have to have one or the other. The design of the monetary system does not have a reverse gear. That's very interesting. Hey, what's your background, by the way, Get Crack?
I'm just an electrical engineer, dude.
Really?
Yeah.
But you seem to have a strong interest in like economic and monetary policy.
I love everything. I love knowledge. I got a PhD. And the reason I got a PhD is because I just like learning. That's why I don't make money. Like the way I make money is just like day trading bullshit.
Yeah.
But I love learning. I love subjects. I love all kinds of shit. You know, that's my thing.
And so you wrote this. Did you get it published anywhere, or you just wrote this for
No.
I
just summarized his podcast because he just goes into these long tangents, and I just was like, I just wanted the key points he was making, and this is the best theory I've heard about the Eurodollar system.
So my point of the Fed,
But I don't understand.
new dollars. Go ahead, Ryan. What are you saying?
No, I was just going to say, like, are you just describing how they make money, which essentially is by, with the rate, essentially?
That's correct. I mean, people need to understand the basics, because we go off on these tangents about stocks, 401ks. It's like, learn the plumbing, learn the foundations first.
Okay, but I'll just say this. So they created a lot of money, and then so the government handed out a lot of money, and then the Fed created a lot of money by affecting rates, which then allow banks to loan more money because it affects their reserves, right? Mm-hmm. And then that circulates in the economy. So it's all right. It's John Maynard Keynes 101. Like, so if you read on him a bit, which essentially is all based on demand, creating demand. If there's no demand, you got to create demand. And both of these idiot parties, Keynes said two things. A, it's all demand based. The government can hand out money to create demand or cut taxes to create demand. So when these idiots talk about stimulating the economy, they're both doing it by putting more money into the public hand, which is either by when they cut taxes, people that have any money.
But the mistake you're making is that, like, we are the lever puller. This is what the dollar milkshake theory is. We control it through the dollar.
Oh, the U.S.?
The dollar is settled. Debt is settled in dollars, right?
Yeah, everything's settled in
That-
dollars.
So we have the lever. So that's
Yeah,
why we have to have Tether. You don't settle in Bitcoin.
Yeah, I see what you're so.
Say,
So
and we
what
don't
you're-
settle in Swiss. We don't settle in Swiss francs or whatever.
But
What is
you're-
that
you're-
called?
okay,
Swiss whatever.
Yeah, so
Hey,
you're
wait,
making the
Greg, let me
argument
ask
for Tether is what you're saying. You're essentially, this whole thing is you're making an argument for Tether as a coin versus Bitcoin. Is that correct?
Yes.
Okay, I got it. All right, that's what I was
Let
trying
me
to
ask you
figure
this.
out along the way. I'm like, okay,
Let me
so
ask you
that's
this
what-
question.
Okay, I got it.
Here's the question I have for you, Craig. Outside of the U.S., what is the settlement currency for Bitcoin? So they're trading Bitcoin in Zimbabwe. What is it still
Yeah,
dollars?
it's still Tether. It's still Tether. Yeah.
So that creates a hell of a demand for dollars in a way, right?
Yeah.
Because the more demand for Tether, the more
It's
demand
good
for
for the
dollars.
government, right? You asked why the government would allow Bitcoin. Because it helps us, baby. We are the dollar.
I see. Yeah, I see what you're saying. So they can keep a scam like that going because it basically, one of the articles I pulled up, and I'm
Hey, we're gonna get shut down now, dude. Because I already gave away too much. We're gonna get shut down.
But I don't think people will settle in Bitcoin at any point, though. Okay,
Yeah.
because
No.
it's
they
not
won't.
going to become the reserve currency.
No, it won't. It won't.
Yeah. Okay. So, and that's
That's the whole point of why John was saying Tether is a scam. Tether, yeah, it is a scam, but it's a scam that the U.S. government likes to perpetuate.
I mean, and the U.S. has looked at their own digital currency and things like that. But I don't. Again, I find it challenging when you can't spend it, right? Is it a currency? You can't go spend it anyway. And what's it? And behind it's an algorithm. What if somebody figures out a way around that? I mean, it's impossible, everybody says. And I don't know. And the other thing is, every single transaction is its own ledger account. That's not going to get any cheaper from an energy standpoint. So I just don't know if we want an unmediated, what's the word I'm looking for? An ungoverned currency. Do we want that?
So that's why I was hoping John could understand what's proof of stake, what's proof of work. I don't get that. He has a computer science background. Explain it to us, John. You got to do your homework.
Yeah, proof of stake. Look,
initially, my first thought was to cover the companies because I hadn't even paid attention to what a stablecoin is, and I understood how FTX went out of business, but I didn't know that this was the business model. Is that there's an intermediary currency paid to the dollar. Once I found that out, I wanted to just call the show "Bitcoin is a Scam."
Well, what about
just
DeFi?
wondering at that point.
What about DeFi? That's a whole other category of decentralized finance. There's all this other loaning operation they want to do, and I'm like, there must be 100. There must be 500 coins out there, probably even more than that. Everybody's got a coin.
Yeah, there's pregnant butt coin. There's a pregnant butt coin,
Lumens,
cummies, and all kinds of free.
the-
We gotta make a John Galt coin, dude. Dude, we got.
I think we need to do another show, like an explanation of Bitcoin mining. That probably would very much come in handy. I think we got through a bit of what a stablecoin is, and I think that is where the fraud in Bitcoin is. From the standpoint of these companies don't have to have the dollar backing of the amount of Tether or stablecoins that they print or mint in this case. But yeah, learning something new about the Satoshi and all of that. I don't even think the guy exists, or he may be a CIA plant that created this.
Well, I've wondered that because you think about how much actual dollars have been pumped into this. I mean, what if it's bullshit? What if it's just some guy, right? Or CIA? I mean, I mean, essentially, it's just a narrative, right? A very good algorithm, a very good equation, and I guess it's an equation and a narrative. And you're just solving a mathematical equation. So,
one company equated it to an indulgence from back in the day, where people would buy indulgences, and Bitcoin is an indulgence.
So, before the 95 thesis, I guess. The selling of indulgences. I get it. But
well, we have to end it here. I give you guys last words, and then I'll end it with my last words here. Gary, Ryan, you want to go first?
No, I just was going to say that I only invest in things that now, at this point in my life, and before I've made dumb mistakes, but I only invest what I understand, and I look at when I look at returns, I look at 10 and 20-year returns, not 2-year and 5-year. So that's where you start, and look at the long term. You know, the real money adds up over a generation or long periods of time. Anything that's get rich quick, usually you don't get rich. You get broke. So
I agree with that.
that's my take. So anyway, that's it.
Okay, crack.
See you guys.
No, see ya.
Hey, man.
Any last words? Any suggestions on
No,
future
nothing
topics?
much. I mean, I think you hit it on the nail. It's like for most people, it's better to do it that way, as Ryan described. But for people that want to take a little bit more time, you can beat the performance of an index. The index is the benchmark, and we just touched like the surface of it. We really just took, because the milkshake theory, you hear what it was talking about: liquidity. You can time the market on liquidity. Okay, and I'll just leave it at that, because maybe next time we can go over that. What drives the market bubbles? What drives bubbles?
And I also want to do, I guess, kind of a follow-up to this about the Bitcoin mining, because I doubt many people have an idea of what Bitcoin mining is. So it's probably good to go into that, because I think we cover a pretty high level of what Bitcoin is and how it's working. I think we kind of did a halfway decent job covering it skeptically or critically, I'd say. But hey, thanks for joining Get Crack. Are you jumping over to CT later today?
Oh no, man! I can't. Man, I'm on the West Coast. I can't do all this shit all the time. I'm just volunteering my services here, man.
I appreciate it. I think you have a lot
make
of
more money like fucking trading like BT records. Like, what the fuck is this bullshit?
Hey, I'm gonna finish reading up your white paper there.
Yeah, dude. Yeah, read. You have the other link too, right? The Peter Thiel Roth IRA King. Like, read that, dude. You'll learn the real IRA scammers, man. This is deep level. This guy made out with billions off of IRA, man.
Oh yeah. I think the IRAs and all that stuff is more or less a scam.
Because it's a tax shelter for the rich. It's a tax shelter for the rich, dude. As you said, the low level guy doesn't get much benefit, but the rich guys get all the breaks.
Yeah,
you can't get ahead. You can't get ahead. You want to get ahead? You gotta listen to my channel, Day Trade. No, I'm not saying that.
Hey, when are you gonna start your channel, by the way?
I was thinking of making a blog at first, but now since I'm used to this, I'm gonna get a microphone, improve that, and we'll see how it goes. And people can ask me questions live while I'm trading or some shit.
Yeah, man, that'll be interesting. I'd watch that. I'm not even a trader. I have a good friend. She'll watch it too. She trades.
No, you shouldn't day trade. You should swing trade. At least rotate things around every 3 months, every quarter.
Is that what you do? You swing trade.
That's how I make my real bucks, because everything runs on a clock. Okay, and if you know how to time, you can time. That's my focus.
But you don't day trade at all.
No. That's just for fun, I'm just, if I'm bored, I'm like, let's run, whatever.
Yeah.
Because the real money's made in swing trading. Yeah.
Yeah, I've heard of swing trading. I didn't know that's where the real money was made, though.
Because
we have go ahead.
Yeah, because everything runs on a cycle. That's what I want to focus on, not on options, not on futures. Like, that's like the specific tactics. I want to focus on strategy. This is Sun Tzu shit. Sun Tzu. I don't care because tactics change all the time based on. That's what people make money on with the hedge funds. They just want to change tactics to fuck you around. But strategy never dies. If you learn the strategies, it doesn't matter what the tactics are. You learn the tactics on your own time. I'll teach you the strategy. You figure it out.
I like that. I like that. I can't wait to your channel.
Yeah.
All right, get Craig. It's always good having you. I hope you're up tomorrow. I think I may do a kind of a follow-up to this because I don't think we went deep enough, and I think there's a lot of interest. What do you think?
All right, it's got a lot of noise right now. I'll see you, man.
All right, see you later. Have a good day. Brandon Looney, I'm sure you're probably here to pitch your site. You wanna tell everyone about your site, your stream, or you have thoughts about Bitcoin here?
Hi there.
Yes. Hey, how's it going?
I hit the bell on your channel.
Thank you. Everyone hit the like button, by the way.
There's a restream button.
Okay, all right. Did you want to comment on Bitcoin or anything?
I just now got here.
All right. Any thoughts about Bitcoin or anything before we get out of here today?
My computer was muted because there's a little bit of swear words.
Okay. Well, we're about to end the stream for today. I'm going to end with my last words. Why don't you give everyone your site so he can, so people can subscribe to your site?
Like and subscribe. Many people say I have the best streams on YouTube. And what if you came to my channel for a stream?
Yeah, I'll come. I think
Do you have a Looney Tunes character?
Yeah, I think I'm subscribed to you, but I'll check and make sure. I will put your link in the channel here.
Do you have a Looney Tunes character?
I'm sorry. Say that again. But anyway, we're about to log off here for today. Everyone join Brandon's channel. I think it's Looney Tune Fan 2000. All right, and I'll give my last words here. I've always been skeptical of Bitcoin, and I came into this discussion to talk about Bitcoin, and then we started talking about 401ks, and I'll probably follow up with that. Another talk on that, because I think 401ks are the biggest kind of vehicle that holds people back with the promise that they're going to be better off in the future by more or less letting someone else take their money and do the best things for them. If you understand nature, that doesn't make sense. Who will start a business to improve someone else's life by taking their money without that business ultimately being corrupted and them taking your money and stealing it, pilfering it, or finding other schemes to take advantage of your money? If you go back and you look at the history of the 401k, people, the Wall Street people, because Congress members don't write laws, they basically crafted laws to have your money captured for 40 years if you do the right things, as they say, and just stick in there and stick and forget it. You give these people 40 years of access to your hard-earned money. And if they mess it up, you have no recourse. They just say the market was down. If they do well for you, well, they're doing better for themselves. But I think what's missing is, what could you have done for yourself? What could you have done with all that money that you invested? Did you ever have any dreams to open up a restaurant, a food truck? And did you ever forego those dreams because you didn't have the money? Well, you had the money, but it was in your 401k or something like that. And I've heard many people over the years talk about what they would or could or should do. And they had the money, but it was just in the 401k. And the government said it had too many rules and restrictions and penalties and withdrawal fines that they couldn't get the money to start their business. So they carried on working and working and working till they were too old to pursue their dreams anymore. And you often hear about people like they have a side business. They never ever, very few people that have side businesses that ever make it a front business, because it's the side business. And the front business is the one where all their money is investing in their job. So they have all this money on the side in a 401k, phantom money, more or less. It's digits in it, database entries. It's not real physical money. They can't put their hands on it. it would take 3 or 4 days for them to even get a little bit of it in a withdrawal. And all their dreams and ambitions from childhood are locked away until they're 55, and then the government forces them to start taking withdrawals. And so I just think a different approach needs to be taken in terms of how people go about investing. I think primarily you need to invest in yourself. Pay your bills down, pay your mortgage down, pay your car note down, get your utilities and all your other bills under control long term, and then invest in yourself. And once you build a foundation, a strong foundation, having invested in yourself, then I think you can go off into abstract assets like stocks and bonds and things like that. But as it relates to and that's not investment advice, that's personal growth advice. Invest in yourself. But then I want to end it off with my thoughts about Bitcoin. I've always thought Bitcoin was somewhat of a scam. It primarily applies to young people who are idealistic, who think that the next big thing is going to come about and displace the old thing. And it's good idealistic thinking. But what really cemented my thoughts on Bitcoin, and I'm going to share the article with you if I can, and it will. Let me see if I can find it. I remember when a man who had made hundreds of millions of dollars, he decided to come back to bedside Marcy projects. A man made hundreds of millions. And what was the idea that he brought to the ghetto to these people? The Bitcoin Academy. And that's what I knew. It was a scam. Jay-Z Carter and Jack Dorsey. I remember when he went down to the ghetto trying to pitch that Bitcoin to them blacks. And them blacks, they living near the projects. What the hell they need to learn about Bitcoin for? But there he was, pitching Bitcoin to some blacks. Told them he's going to open up a school to pitch Bitcoin to them. And that is when I knew that Bitcoin was a scam. And we talked to Get Cracked today, and he talked about the milkshake approach and the straw and all of that. And I think about, as I've learned more about how all of these stable coins have to be settled in dollars at the end of the day, they're all pegged to dollars. And the anonymity of Satoshi, the Bitcoin is a long straw that reaches all over the world, creating demand for dollars at the end of the day. And I wouldn't be surprised if at the end of the day, the Bitcoin is a government operation meant to be that long straw deep into the underbelly of third world countries and other countries that have currency and other type issues. Anyway, I think this has been a great stream. I think we learned quite a bit about Bitcoin and 401ks and stuff like that. Stanley, I wish you would come on one day. It would be great to have you on here. You offer interesting point of view. Anyway, guys, it'll be great to see you next time. I think I'm going to do a Bitcoin follow-up to this. I'll do the mining. That may be kind of interesting to anyone who's technically inclined. The software and whatever goes into mining the Bitcoin and how much these guys get paid. I read a little bit about it, so I think you'll be interested to hear more. Anyway, thank you again for joining. And see you later.